Hi guys, welcome. Nvidia is one of the few tech companies that have been profitable for long periods. It is also in the high growth markets of computing. So in this video, I'll be sharing the stock analysis for Nvidia and as usual, answer these three questions. Is Nvidia worth investing in? Is it a buy or a sell at the current price? And is Nvidia trending up or down from the technical charts? Nvidia is in the computing business. They started in the PC gaming space with their market-leading graphics processing units or GPUs. And a few years back, they ventured into higher-end computing and servers that are used in data centers. Nvidia also developed the CUDA platform that is used in machine learning and artificial intelligence. CUDA is a compute-intensive platform that can perform millions of complex calculations in seconds. Nvidia has platforms that support wide-ranging solutions from gaming to deep learning and AI to self-driving cars. Nvidia recently acquired Mellanox for $7.1 billion that owned deep expertise in networking technologies. With this acquisition, Nvidia has the end-to-end full-stack solutions from AI to networking. It will enable Nvidia to meet the demands of the next generation of data centers, which are data hungry and time critical for applications such as self-driving vehicles. With that, let's dive right into the financials and see whether Nvidia is worth investing in. I'll be using the quarterly reports in this stock analysis video. The revenue has been growing steadily for the past few quarters at around 40% year-on-year growth. There was a big jump in revenue in the most recent quarter to $3.9 billion from $3 billion in the previous quarter. Compute and networking was the biggest growth sector and grew by 130% from a year ago. The drivers for this growth were partly due to Mellanox and also Nvidia's own Ampere GPU-powered server solutions. The gaming business grew by 26%. Mellanox acquisition immediately contributed to 14% of revenue for the most recent quarter, which is nice to see. We can expect further revenue growth in the future. The gross profit has been rising steadily and sits at $2.3 billion. The gross margin has been hovering around 60%. That is quite a high margin and is a good sign. But let's see if that high margin translates into a high net margin as well. Nvidia is a profitable company, and the profits have been growing from quarter to quarter. The first thing I noticed was the sudden drop in operating income in the most recent quarter to $651 million from $976 million in the prior quarter. It was primarily due to increased research and development and sales and marketing. I believe it was for the Ampere architecture platform. We have seen the revenue increase due to this platform earlier. Also notice the acceleration in the operating income in 2019 from $294 million in Q1 of 2019 to $990 million in Q1 of 2020. I would like to see an increase in profitability in the next quarter once the development cost for the Ampere architectures has been fully accounted for. The net income is $622 million in the last quarter. Net margin has fallen to 16% in the most recent quarter from the high of 30% in the previous quarters. Investment in research and development has been rising gradually from $647 million in Q1 of 2019. There is a spike in the last quarter to almost $1 billion. Similarly, there was a bump in sales and marketing as well. On a per share basis, the earnings per share is at 99 cents for this quarter. That gives an annual earnings per share of $5.44. Nvidia's operating cash flow is positive, making it a strong company. Here's the big acquisition of Mellanox at $7.1 billion. And Nvidia invested another $7 billion in marketable securities in the most recent quarter as well. This has resulted in a total cash outflow of $13.5 billion for investing activities. There has been a constant net cash outflow from financing activities except for that one-time gain of $4.7 billion here. Now this was due to the proceeds from long-term debt of almost $5 billion. Nvidia pays a consistent quarterly dividend of around $100 million per quarter. Nvidia has been buying back its shares as well. They made a purchase of $94 million in the most recent quarter. The growing positive cash flow from operations has strengthened the cash position. There was a total cash outflow of $12 billion for the acquisition of Mellanox and marketable securities. With that, it leaves Nvidia with a $3.3 billion in cash. The strength of the cash position is evident from the quick ratio. It has dropped from 8.1 to 1.3 in the most recent quarter. Minimally, a quick ratio of 1 is preferred. The quick ratio measures the ability of the company to service its short-term financial obligations that need to be serviced within the next 12 months. Nvidia's quick ratio is still good at 1.36, and due to their profitability, it will start rising again. Nvidia has a strong balance sheet with very little debt, and the assets are on a generally rising trend. The long-term debt has been flat at around $2 billion, but has increased to $7 billion in the recent quarters. But overall, the long-term debt over assets ratio is still small at 0.28. The book value per share is at $22 currently. The book value measures the net asset value, which is total assets minus the total liabilities on a per share basis. At the current price of $507, Nvidia is trading at a multiple of 21.8 price to book. Let's take a look at the technical analysis. It is not surprising that Nvidia's price has surged rapidly in recent months, but I am a bit concerned when I see a parabolic rise such as this. The volume is healthy at around 19 million shares traded per day. It has also broken above the previous overhead resistance at $300, and the price has accelerated above the uptrend channel as well. A high level of exuberance is in play, but a look at the daily chart shows no signs of a slowdown yet. So, is Nvidia worth investing? Nvidia is a solid company. They are providing one of the most important parts of the tech stack, which is computing power, and they have been moving up the value chain in data analysis. Due to this, they have a high gross margin and net margin. Is it worth it at current prices? It is overpriced at the current levels with a high PE ratio as well as a high price to book. Technically, the trend is strong, but I would not chase it at these levels. Please subscribe to my channel if you have found this sharing useful, and hit that notification bell so that you don't miss out on any of my future videos. Speaking of which, I'll be doing a video on AMD next. AMD is another solid tech stock, and I'm planning to do an Nvidia versus AMD, and I'll see you soon in that video.